When the trade tweets hit, we look to trade bellwethers, Apple, Nike, Caterpillar, to measure the impact. But is the real pain or gain actually being felt in the small business sector? Joining us is Howard Yu, Professor of Management Innovation at IMD Business School. So, I would assume that it's companies that are operating in China, selling in China, have their supply chain that are getting hit the most. But you actually think that small businesses are hit disproportionately hard, even small businesses here in the U.S. How so?
Yeah, because if you think about small businesses, they rely actually a lot of this global supply chain, whether it's equipment for capital equipment, for example, all the way to raw material import. And quite frankly, for small businesses, they lack the selection. They don't have backup plan. So if something gets shut out, unlike a global 500 company who can shift and have options, small businesses just need to eat up and see their margin, already thin usually, getting erode even further.
This kind of makes me think that, we hear investors say things like, oh, well, if we could get some trade war resolution, the stock market would go up, right? It kind of makes me feel like, to hear you talk, that there's no real resolution here, right? Companies are already scrambling to figure out their spending plans for next year, maybe the next 2 or 3. So what kind of is the path forward here?
Yeah, I think the observation with the stock market is helpful, but it cannot be the full picture. Because after all, when we're thinking about economic policy or tariffs, it has an impact in the long-range planning of a company. Company can try to shift the supply chain across country, but it takes not months, but years to make the preparation, to scale it up, the equipment, to make sure the factory actually up and running. Meanwhile, the tariffs pronouncement these days is almost on a weekly or daily or even hourly basis. So there is a mismatch in terms of time horizon, and that in fact worries me the most.
I was actually intrigued by what you talked and wrote about startups, because I don't think we think about them enough in this. If you're starting a company right now, why is a trade war a challenge for you? Like, what's an example of a startup that faces a big problem?
Yeah, sometimes when we think about startup, we think only about the digital pure play. But in fact, a lot of the startup are having this blend between hardware and software, right? So I remember I attended a pitch night at Harvard Alumni Club, and they're talking about medical devices. So of course, there's a lot of artificial intelligence, data analytics, and so on. But in the end, it's hardware, is advanced hardware. And the way they do it so quick is because they leverage in the industrial cluster in Shenzhen, give them the blueprint, what you need to prototype, and ship it in a very fast manner back to the United States to test out with the end consumer. This is what makes Silicon Valley great, in fact. A lot of this top-end innovation requires sort of low-end, cheap supply chain on the back to make sure our cutting-edge technologies continue to push the next frontier. And this is where the disjoint happening.
Mm-hmm. Well, and so to that point, would it even be possible to do some of that prototyping here in the US? Forget about cost effective, just like to do it at all.
Right. It is possible with some systematic investment going forward. Right now, we do have some of these, right? But it's not in even the close range in terms of scale, in terms of low price, even 3D printer, we don't have enough. And so there is this idea that we want to develop our industrial base or cluster through tariff and protection policy. But if we push this to be such a fast pace of a schedule, then all these medium-sized companies or even startup and small companies will suffer in the short run.
Is this a problem that the Fed can solve by cutting rates? Because the president seems to think that if we cut rates by 100 basis points, this is going to be good for small businesses. Does it give them a leg up by having cheaper capital? Will they be able to kind of make up for some of the challenges?
You can think about lower interest rate would translate to cheaper loans. So you give this startup maybe a lifeline for the time being, but it doesn't solve the reality. If we don't have a good supply chain, you don't have a good supply chain. You can borrow loans to bridge here and there so that you don't file bankruptcy immediately, but it is a really patchwork to make up a systemic problem right now.
Howard Yu is Professor of Management and Innovation at IMD Business School. Interesting to think about the trade war and these companies, because we are talking so much about a lot of the big caps all the time. Thanks a lot.
Great to be here.